Hello guys, this is post session review for 29th of May, which happens to be a Monday. So starting with the market environment, with the hindsight, how would you define the market environment? With the hindsight, I would define the market environment as non-volatile and ranging. Market environment in Bank Nifty and in Nifty, it was a bit volatile but still ranging, sideways to ranging market environment, volatile market environment in Nifty, and in Bank Nifty, it was totally sideways market environment all throughout the day. How successful were you in identifying the market environment during the trading session? So at the open, uh, I was completely not able to identify the market environment. I was scared. I wouldn't say any idea. I had some idea. Definitely, I had some idea. Uh, but I did not have this full concrete plan in my head. That how will I trade today's market after open? What signs were present to indicate this kind of market environment? So this was I should have had this in mind. So the market had been consolidating for quite a bit, and in Nifty and Bank Nifty both. This is Nifty's chart, and Nifty has been a bit more liberal and kind when the consolidation is considered, but in Bank Nifty, the consolidation was extremely brutal in a very narrow range for a very long time. So and if you see since the last 2 days, it has rallied for more than 800 800 points within 2 days. So uh, this was huge gap up also from Friday's closing. If you see, if it was around 300 points gap up today in the morning, and that was also the gap broke the consolidation. I expected the gap to break the consolidation because generally that's how major consolidations are broken. But key features to identify this kind of market is that if after such a huge gap up, after such a huge run and a huge gap up, you can expect the market either to go sideways, but if it is not such a huge gap up, then you can expect the market to come down, retest these levels where it was initially taking resistance, and then breaking out. Then it gives a very nice rally. But after such a huge gap up, and Bank Nifty opened with such a huge gap up, and in the open only it ran around some 257 to around 500, and only 450, so near whole number it came 250 points further. So after that you can expect the market to either retrace or go in a sideways consolidation. The market won't just keep running and running because there's no actual news sentiment as well, that and the market is sitting at all time high. This is the gap up is not that it just broke out, or this is all time high. And Nifty also, in Nifty you will see Nifty has done more uh, rounds, if you say. So it uh, opened more than, it has covered more than 385 points. So, and Bank Nifty had some 800 points under its belt. So, so it's just 1.97 Bank Nifty, but Nifty has covered more than 2 to 3, 2.5%. So, Nifty was, I was more uh, confirmed on Nifty. Uh, so these are the few points that after such a huge rally, one of these guys at is trading at all time high. So there can be some profit booking because the market won't just keep going higher and higher and higher and higher. The market has to pause and retest, you know. So either it will be a retest or it will go retest of the breakout levels, some retracement, or consolidation. So this was the biggest hint. Even before, after we know where the market is opening, I could have expected that the market should behave this way, but I was not successful in that. Coming to the next section, how would you trade the open? Initially, I will just stand aside and see what's happening in the market. I wouldn't jump in at all because this is such a huge gap up. At the open, what I'm expecting is the market should take resistance and then there should be some profit booking. This is what I'm expecting at the open after such a huge gap up. So the market opened and Bank Nifty, the first candle it made was totally bullish candle, although there's some retracement, uh, but it was totally bullish candle. So this was my uh, what do you say, ये मेरा ख्याल था सुबह सुबह ट्रेड करने का. But price action. So coming to the second point, what was the price action in the open to trade the way you did? So I traded Nifty in the morning's trade because it was fitting my idea that I will wait when the Nifty or Bank Nifty is giving some indication that it wants to come back or there is some kind of profit booking. So Nifty, between Nifty and Bank Nifty, if you see Bank Nifty, the first three candles were all bullish, so it was giving no sign of taking a trade, although it did make some candle at 935. But and these candles, they were not fully bullish because there was some bearish pressure in them. But I prefer to trade in Nifty because if you see, it clearly took resistance from here. And to be very honest, I wasn't aware that this is a resistance zone. Uh, I mean, I was aware, but I didn't count it as a resistance zone because of these two major ones. I was only counting the major ones. This was one small resistance zone, which I thought would work, but instead of that this was more. Uh, so after this, the price action, if you'll see, uh, rejection, this candle rejection, and it's not breaking the first candle's high. Then at 9:30 candle, I was confirmed that I'll trade Nifty, and but the risk reward was not very good. My first target was around day's low, because this is still keeping in mind it is a still bullish environment. So I placed a limit order to get a better risk reward. So I took the entry around over here and I exited around over here when the price stalled. My initial target was this, but I exited over here because I knew that it's not very prudent or practical to expect huge uh, downside targets in a very strong bull market. Coming to my second trade, uh, market environment, again, the market environment review. I think I have already done that, sorry. Uh, my second trade, starting with the benefit of hindsight, was your trade based on valid setup for the market environment? My market environment assessment was valid, probably valid for the morning session, but afterwards it had to prove that it's not going, and this trade failure of this trade proved that it's going to be a sideways ranging or a retracing market. So starting with the questions, whether it was a if it was a valid trade, review the signals that led you to the identifying of this trade. So this trade, the trigger was higher high and higher low formations. All the banks, the components were up and break after consolidation. So you can see over here, the market opened gap up. This was the consolidation and this was the break. Okay, I entered over here on 1 minute time frame. You can see I only entered after I got full recognition that it's going to break out. On orders window, you can see this was my second trade. It's around 11:17. Okay, so this was formed. I think this was a very nice trade, even though I just crashed it. But it was very nice on my part to be able to identify that this trade is not going to work, because I had this thing going on in my mind that this guy is still giving breakout. Then I was very cautious and alert. Mm, so what was the ideal entry point? I think my entry was ideal only. Uh, cannot I cannot think of a better entry possible, because I waited for the break, and then I entered on the break. Then what signals did the market provide which could have led to an improved entry? uh, I don't know, probably even more longer consolidation. Was the initial stop location appropriate? Goddamn right, yes. The initial stop location was very, very appropriate, because this was a ranging environment and waiting for the trade to work could have been very disastrous, because I was expecting the market to be ranging in the morning, and this was a breakout which was out of nowhere. Uh, so I had my reservations. Why I had my reservations against this trade? Why I exited this trade is the same reason why initially I was very reluctant to take this trade. Because of, first, if you see the 11:21 candle, this is a proper shooting star candle, and this is a follow-up candle, 11:21 candle. And also it closed below the day high. Day high is around this place. Look at the 1 minute chart. uh, this candle gave the breakout, and this candle closed below again the this thing. If it could would have run away, I would have been fine. I don't mind. uh, Nifty was not supportive. Nifty was standing at the resistance at that point, and it's comparatively weaker than Bank Nifty, if you remember. So that was another thing. And then SBIN was doing a 90-degree rally. This was another thing which saved me. Sorry, SBIN was doing a 90-degree rally. See, at 11:20, this is around this place I'm taking the trade. So this is actually very dangerous, because once the stock has moved like this, you can expect a sharp correction or a very long consolidation, which it did give me a long consolidation, unless there's some news in it. But I don't think there was any kind of news. And then it also happens to be around 11:22, which is infamous. 10:45 to 12 o'clock, it's infamous for giving fake breakouts. So that was also one thing. All these things, factors combined, it was a very low confidence in the trade, even though there were factors like higher low. uh, Although higher high was not yet being made, but higher low was still made. All the banks were up, and there was a break after some decent consolidation since the morning. But it was still all these bad omens. They were standing, and I was not. I just exited this trade. What were the optimal exit locations? My exit was exactly optimal. If you see, the trade did not work out, and this also happened to be the highest point in the day. I was getting decent profits out of it, around 10%, but not 10%, around I think 8 to 9% profits I was getting. But I let it go, and it was a wise decision on my part. I could have entered again. I was looking very closely at what the price is doing over here. If the price had consolidated and then moved up, I was actively looking to go long over here. If the price had gone up again and closed above the day high again, then I would have entered again. But my main issue was the target was only 500 because this is a whole number around here. But one thing was that since it has consolidated since morning and then it had given, then it had trapped the break weak hands and then again giving a breakout. So it was possible that uh, uh, the price could have moved more than 500. What signals did the market give to move the stop beyond to break even and beyond? So all these bad omens combined, and then the price action, shooting star, and then close below this thing, the day high, which it should not have, and then again it continued, it broke the candle's low, and then again it came down. So all these reasons were enough for me to exit the trade. That's why I exited around break even, but still the market gave me 4-5 points profit. So yeah. So this is the last trade. This is the third trade of the day. And starting with the questions, what signals were present that should have led you to avoid this trade? So there are a few signals. That first was that this was a ranging market environment, and this was proved by this candle that it refused to break out. It came back into the range, and then over here near the range it formed this. So I got confused with this thing that it's making higher low, so maybe this is gonna go and go till 500. This was my trigger. So these were few triggers which led me uh, to take the trade, but there were many triggers which uh, l- the triggers which stopped me. That first was that the market environment only was not suitable to take this kind of trade. Then there was this huge one side rally in Nifty. So this also happened to be one missed trade. uh, I was under this indecision where I should take the trade in Nifty or Bank Nifty. So I left Nifty and I thought that I'll take the trade in Bank Nifty, but in Bank Nifty it backfired anyways. And the third is price did not sustain above the local resistance. So this was the local resistance which was formed in the since the morning. If you see, the price went over there, it did not sustain. Initially it was taking resistance, and over here also it was taking resistance. It's very clear that the price did not close. uh, this was the place where I took the entry because this was the candle with full green candle, and then that led me by the time it closed like a shooting star. But that could have been very big green red signal. But the next candle I took the trade kept my SL below this place where this was a support. There were multiple supports over here, small supports. So if the price had to go up, it would have gone up from here only. But this was such a big blunder on my part, that ranging environment. And why? Because I thought that this is higher than this, so it must be higher, it will be forming a higher high. Bro, when there's market structure established, then believe that it's going to be the same. So this was this thing. Then another was what was the initial stop? Initial stop was fine, not very appropriate. And what signals did the market provide for moving the stop to break even or beyond? So even after when this was unable to go up around 2 o'clock, 2 o'clock, these two candles were unable to go up, I should have been very alert and ready to exit at any moment. So and I should have moved my stop below this swing low from here to here. And if you see, I got a very bad exit in this trade. There was this one candle which in a blink it broke down, and took more than what I wanted to give to the market. In just one blink, it just vanished all my initial profits in the morning, took everything, and then went down. Although I got it retraced a bit and then I exited, I did not exit immediately. But it was very hard hitting. All the profits gone since the morning. I ended the day in the loss. This was a very bad trade on my part. It was a forced trade, and even after looking that the price was getting rejected over here from a local resistance area in a sideways market environment, and that too, like, this is the area from where the price initially started coming down over here, I should have not taken the entry. Definitely not taken the entry over here. There was this one missed trade in Nifty 50. The market was ranging environment, and the price came, and from the day's low, first candle's low and day's low, it formed a hammer candle, that too after falling for us quite some time. So the initial target and stop loss could have been this. So the signals where I should have identified the trade was ranging environment. So expect the price to move back to the demand zone, to the supply zone, which happened to be first a smaller this one, and then again the major one is this. So I could have taken the trade around over here, and then for 1:2 easy targets, I could have taken the trade. Yes. The best trade of the day, I don't think it was a good trading day for anyone, and there couldn't have been better. There's no best trading day. The best trade that would have been this market open, where one could have shorted, but still, I don't think there could be th- this day is not does not have a best trade. So my major mistakes of the day was where my third trade, where I ignored major warning signs, and in the learnings department, my major learning was market environment, and my trade too. Market environment, understanding and expecting how could the market environment be throughout the day, and my trade to where I wonderfully acknowledged that this trade is not going to work, and I exited from that trade.